The real problem is that some investors treat free cash flow like some magic words instead of understanding what really drives it. They think a company with high free cash flow is healthy and one with negative free cash flow is in trouble. But that's not always true. What is free cash flow and why some investors misread it? You have probably heard this before. Look for companies with strong free cash flow. But when you check the numbers, you are not exactly sure how does it work. Is it profit or is it leftover cash? Even after reading reports and watching some YouTube videos, you are still unclear how free cash flow can help you to make better investment decisions. Free cash flow simply measures how much real cash is left after the company runs its operation and reinvests to maintain or grow its business. So the formula is straightforward. You use operating cash flow minus capex spending equals to free cash flow. Operating cash flow is what the business earns from selling its product. Capital expenditure are cash that it needs to maintain the business, such as equipment, servers, or infrastructure. And what's left is what we call the free cash flow. But here's what most people miss. High free cash flow might mean that the company is not reinvesting enough. Low or negative free cash flow might mean that they are spending aggressively to grow. So without any context, this number means nothing. Think of it like this. There are two friends that each earn $10,000 a month. One saves $5,000 because he never upgrades his skill or any tools that he uses. The other only saves $500 because he has been taking courses and building a side business. So which friend is actually better off in the long run? And that's how company works too. Some look great on paper, high free cash flow, low investment, but their growth slowly die because they are not planting the new seeds. Others shows negative free cash flow, but they are building the next decade of growth, like how Amazon did for many years. So look at this picture here. This is from physical.ai. You can see Amazon's early years free cash flow went from mostly negative and eventually they turned positive. So how can we avoid this trap and how can we have AI to help us? We have to look at the trend, the cause of it, and the context. First, upload any company's 10K into ChatGPT and use this prompt. Summarize how free cash flow has changed over the past 3 years. What are the main drivers behind this change? And in just a few seconds, you will see whether the company is actually spending for growth or just cutting down on their reinvestment plan. So if you like to have AI that helps you in your investment decision, I welcome you to my Deepmynd Thanksgiving event. And we will share how to use AI to detect capital allocation. So comment AI and I will DM you the link.